comes from. Okay, now I know we were just dunking on, Europe for telling their people to just shut off their lights for electricity to save money on energy instead of trying to create more supply. Whatever. This article does come from the
Mm-hmm.
BBC, but it says
BBC.
the BBC, the British broadcasting company or something like that. And I know
Yeah,
it's like government run,
it's
which
Just British broadcast.
uh,
Broadcast is two words.
broadcast. Oh, my bad. But it's government run. But so shares in this article shares in shoe brand Allbirds, once seen on the feet of famous people like actor Ben Affleck and former U.S. President Barack Obama, soared on Wednesday after it announced plans to pivot from footwear to artificial intelligence. The San Francisco based firm said it had struck a $50 million deal to become an quote, AI compute infrastructure, unquote, business and change its name to New Bird AI. The announcement sent the firm's shares surging by more than 580%, though its stock value is still more than 90% lower than when the company was first listed in 2021. Allbirds trainers became popular among technology workers in Silicon Valley, but the company faced serious challenges in recent years. New Bird AI will buy advanced graphics processing units (GPUs). Oh my god! And I thought the Steam machine was gonna get some what's called like get some
Mm-hmm.
traction because I remember they were saying some company was like we're gonna make our own chips, but oh my god, they're buying more. Uh, processing graphics processing units, computer chips that power AI. Allbirds said in a statement. The company said it had seen a quote gap in the market unquote. BS. There's no gap in this market for stuff like that. If anything, it's becoming oversaturated. And we'll get to that in a second. That has left many businesses without enough computing power because the industry cannot keep up with demand. Yeah, of course, but its long-term plan is to offer on-demand graphics chips and cloud services that are specifically built for AI. Yeah, uh-huh. The Allbirds brand will be owned by fashion conglomerate American Exchange Group, which includes names like Echo, Untold, and Aerosols. I'm pretty sure I'm pronouncing that one wrong. Following a $39 million deal announced in March, Allbirds chief executive Joe Vernaccio said the move will allow the wool runner maker to, quote, thrive in the years ahead, unquote. Branding consultant Wei Khan got everything from Conduit Asia likened the move to a quote liquidation unquote rather than a pivot, using the stock market shell of its shoe brand to move into an unrelated business. Retail analyst Hitha Herzog said the excitement over Allbirds quote just by putting AI in an announcement unquote makes it quote clearly a meme stock unquote. The meme stock phenomenon gained prominence during the COVID-19 pandemic when some companies shares surged in value due to strong interest from retail investors was boosted on social media. There is, quote, certainty AI mania that is going on, unquote, given the lack of proof of product or earnings from the company related to its business, Herzog said. Allbirds was founded in 2015 by former football player Tim Brown and a clean technology businessman Joey Zwingler. The footwear firm opened dozens of shops in the US and around the world, including the UK, New Zealand, China, Singapore, targeting casual joggers, office workers, and yoga lovers. But the company has struggled to turn a profit since it's listed on the NASDAQ stock exchange in New York 5 years ago. Its stock market value had plummeted from a high of more than 500 a share to around $2.50 just before the AI pivot was announced. The announcement gave the new Bird AI a shell to trade on, but, quote, a stock going from $3 to $17 on a press release doesn't restore $4 billion in destroyed value, unquote, Khan said. Uh, Now, again, we talked about the dot-com bubble in a couple sessions ago, but this is an example. I was watching one of the a financial professor from Yale. He was talking about the dot-com bubble. I mean, one, the dot-com bubble was from a bunch of people investing into companies that had no reason to have their stocks go up. But another reason was because companies that shouldn't have just been websites were listed as websites because companies that were websites, because of the craze of having .com, everyone's getting more access to the internet. uh if you just had your business was .com, which is where the .com comes from in the .com bubble, you would the values of your shares would essentially increase. He was talking about it because he was talking to about a financial advisor because he was starting a company, and the guy's like, just make your company a website and then sell your products from there, and have the website itself be the business that you list on the stock exchange, because in his words, because of the craze, people just go up, the price goes up. This is exactly the same thing. We have
Mm-hmm.
companies making shoes. Now, granted, they haven't been turning a profit on the Nasdaq. That's an absolutely fair assessment to make there, but went from making shoes to
AI.
AI making.
We get AI
I did make a
back.
statement earlier. I did read it wrong, but they will wait. They will buy GPU. So they're buying GPUs.
They're graphics as a
Boo.
service.
Yeah, to allow so AI can be used on it.
GAAS. Gas.
Yeah. So we used to make shoes. We need to turn a profit. Let's make a press statement and turn our company into an AI company. And then now the shares went up 580%. So we have that, and then we have the barrier to entry from a couple articles ago being lowered to zero, so anybody can buy whatever they want, day trading.
Mm-hmm.
This is a .com
Woo.
bubble. It's like it's almost like reading a book. It's like reading the Bible the second time. You know what's gonna happen.
Mm-hmm.
You're still upset that certain people, Judas, are doing certain things. uh, but you can't stop
It's
it.
just, it's the dot-com bubble all over again. Everyone saw the dot-com bubble and was like, yeah, but this is unironically the one thing where it's like, rip to everyone who thought they were, um, who were punished by the gods for their hubris. But I'm better than that. I'm better than everyone. I'm better than maybe even the gods. Like,
Mm-hmm.
RIP to everyone who was hurt by the .com bubble, but that could never happen to me. My company inflates for valid reasons,
Mm-hmm.
maybe even invalid reasons
My
that I could
company's
make a
different.
killing off of. My company's different.
Yeah, it
Yeah,
gives
like
off.
it's
Yeah, it gives off the whole like it's my turn to make money kind of
yeah.
that kind of mentality. Like
Right. The .com bubble wasn't so bad for the people that made it out.
essentially, yeah. Um, oh my god, I forgot where I was gonna go with that. But yeah, but it's like, well, it worked so well back then, and we made a lot of money. What if we do it again?
Uh-huh.
We can make even more money.
Uh-huh.
I've got a couple notes here. A primary reason for investor optimism is the potential for AI to drastically improve a firm's efficiency in production, the rate at which inputs are turned into outputs. That's one reason why AI stocks are going up. Whether the fact that the companies understand what's going on is besides the point. It's what the value of stocks is what people believe it is, and if these people believe that these companies can make the same amount of product, sell the same amount of product with less people, that's more money in their pocket, more money to shareholders, more money in dividends. So if they see that, it doesn't matter if they understand what the AI is doing. It doesn't matter that some of these companies have actually had to rehire the people that they let go because the AI wasn't doing what they thought it was going to do.
Mm-hmm.
Doesn't matter. People will invest into a company if they think that, well, what I just said. Historically, great fortunes have resulted from figuring out how to reduce cost to charge lower prices and gain a mass market. Problem is, we've talked about this before. There's the gap between the haves and the have-nots is widening. I believe, I know you don't like averages, but I think the average like bonus for a CEO or like higher up manager level people at a company, the average bonus was like $20 million, 18 to 20
Mm-hmm.
million dollars, and their salaries, again, averages, we don't like it, is like $1 million a year.
Yeah.
Not trying to be mean. They they clearly know how to run a company. I don't have a company, but I don't think their services are worth $21 million a year. I could be wrong. I could be wrong. I think it could be a lot less, but that means people who are they're not going companies aren't going to lower their prices just because they can make something cheaper. The fact that prices have done nothing but increase for the past 40, 60, 80 years tells us that inflation goes up, the price of things has outpaced the rate of inflation by miles. So, besides the point, AI represents a substitution for capital labor. I already talked about that. When a company now announces an AI switch, the rising price act as a quote good news unquote, signaling to the market that this is where the quote rates of return are the highest. Already talked about that. People doesn't matter if the company's actually going to return a profit using AI. If people believe it will, they'll throw their money at it. Now, I should probably get into why they do that. Now, theoretically, when you buy stock, you should. Okay, well, you shouldn't, but ideally, people think that they're going to get some kind of dividend. What happens is, company takes that money, they make investments, do whatever they got to do to their production. Let's say they make a profit. A portion of that profit, I think they get to decide. They don't get the you don't get you as a shareholder don't get to decide. I think the company gets to decide how much of a dividend you get based on how many shares you have. So theoretically, the more a company does, the more kickback you get in dividends. Not granted, I say the company decides. Companies have an incentive to give out higher dividends or a higher percentage of their dividends because then people will, in theory, buy more of their stock. So when people think that, I stated earlier, people think that a company is going to at least maintain the same level of production, same level of revenue, but, well, yeah, same level of revenue, but because there's less people being replaced with AI, profits are up. Because profits are up, bigger dividends, bigger kickbacks. So, fast example of why people invest in stocks. Um, The quote present value unquote of a stock is the sum of its anticipated future benefits added up and discounted for the fact that they are delayed. Exactly. People are going to buy stocks now in hopes that their dividends later on, a year from now, maybe in a quarter from now if people are crazy, a year from now, dividends are coming back. As we stated a couple segments ago, um, the barrier to entry is lower. We have the AI, at least the big AI companies, IPOs, um, in I think it's like November, December area. People will buy AI stocks now in hopes that once those companies hit the market, value increases, hit peak, pull out. So that's the
Mm-hmm.
future value thing. Um, History shows that the market crashes are often fueled by a quote new financial contraption unquote AI that is quote theoretically and sophisticated yet poorly understood unquote uh, AI, which quote mutates and then stresses unquote. So, like with the dot-com bubble and with the mortgage-backed securities, we talked from the 2007-2008 financial crash. People see like, oh, this looks like a good investment. They throw money in. Turns out it's not as good as they think or as good as they're advertised. We'll back to that buying hot dogs from the store versus buying hot dogs from someone you don't know. Example: once the like, what's called people buy stock. Once the company starts to not bring a profit, which is weird, AI companies have already told us they're not bringing back a profit, so I don't understand why it's
Mm-hmm.
not stressed. What do I know?
But
I'm not a day trader yet, but
but maybe this time.
maybe this time. But when usually when companies are stressed, they can't produce a dividend, which is it's possible. You invest in stock, you don't get a dividend because the company didn't make a profit. Well, people are going to see that as I'm not making money from this company. I got to pull out and put it somewhere that it is. Um, Not trying to be mean to most people. Most people don't understand how AI works. I'm one of those people. I use AI as a glorified Google search, for sure. I would absolutely not use AI to, say, edit my videos. I would use AI to make thumbnails, but I'm not an artist. That's why. But other than that, I don't know how AI works. I don't understand why it works. I don't know how AI is replacing a bunch of people. I mean, I know why, but I don't know how they think it could. Well, I guess I do think I know how they think it could, but in my mind, it doesn't work out. My example is that companies have started rehiring the people that they fired. But during the final note, I'm going to move on from this. During the dot-com bubble, market values for companies with quote no current earnings and in many cases poor prospects for ever having earnings unquote soared to incredible heights as quote ordinary people became day traders unquote. That's exactly what we're seeing here. New Allbird, they granted they started out like what $500 for a share back in 2021 2022. They have dipped to what was it, $2.50 a share. This is not now. Granted, we can absolutely make the point that shoes weren't their calling. It's AI for sure. We can make that. I'm not going to, but it's a company that isn't doing well and is switching to something that they see as popular. They they don't understand it. I'm not trying to be mean to them. And clearly they know how to at least start a business.
Is it is it mean to be right? Come on now.
I know for sure, but it's like you're going from shoes to GPUs. That was a bar, but
Bars.
it's you know what I mean. It's not like they went from shoes to like AI shoes and then jumped to AI. No, we went from
AI shoes.
track how far you are and where your exact location is. That way they always know where you're at, for sure.
Yeah.
But they're going from something that isn't associated with their brand. In fact, they've rebranded to, I'm trying to be mean, I'm not trying to speak for them, but jump on the AI hype train. Because they see it's being lucrative. They see it's got, to be fair, it's got potential. I don't think it's going to go as far as people think it will, but it has the potential. For sure, everyone's still using websites today, so the dot-com bubble couldn't have been entirely wrong, but it didn't go as far as people thought it would. Now, YouTube, Facebook, Twitter, whatever. So they're not making a lot of earnings. They have poor prospects in having earnings. They make a shift. People that used to have $25,000 to day trade don't have to have that cushion. They don't have to have that barrier. They can start buying into a company that has no prospects. And we're going to be honest here. You buy stocks because you think you're going to, the value of the stocks can go up. Realistically, this is inflated. 580% is inflated. Let's get that out of the way. But you buy stocks because you want to get dividends back. If this company is still not going to turn a profit, people who are buying at the inflated $17 value, it's going to go to essentially zero.
Yeah.
Which is what happened with the dot-com bubble. People, it's like going into an MMA gym, finding someone who's been there for 2 weeks, and it's like, wow, you know how to throw a punch and a kick. How about you come onto the main event for the UFC card? They weren't doing that good to begin. Okay, yeah, that's where we're at. We're at the okay mark, but they're not gonna perform well. Now, granted, they might get a lucky knockout on Chuck Liddell. I think it was Chuck Liddell. Here Comes the Boom.
Ooh.
Here Comes the Boom. Is that what the movie was with Kevin James? It was something about like some science teacher. He started fighting to get money for his classroom. Whatever.
Mm-hmm.
But it could happen. There could be even with websites that were doing well during the dot-com bubble, a lot of them aren't here anymore. MySpace, AOL. Times change.
Yep.
And at least those companies started out as like websites. I can't imagine a company that starts out as making shoes, pivots to AI, has experience in the field of AI. Now, granted, they could hire people. Besides the point. So, it's just a dot-com bubble again.
Mm-hmm.
Anything you want to add before I move on?
Dude, it's just the dot com bubble again. It's just everyone's going, yeah, but yeah, we all know the dot com bubble. Yeah, dude, no, you don't understand. The dot, no, the dot com bubble was like when people would just slap dot com on their business to make it seem more tech forward. We're not like that. We're actually integrating AI in a way that others aren't, bro. They're not. In the dot-com bubble, all they did was they slapped .com and they made a website. They didn't integrate it into their business model, bro. This is integrated into our business model. Oh yeah, really? How are you doing that? We have a business subscription to Claude Code. Oh my god. Like it insert the people from The Big Short, just like the guy who plays what is it, Steve Carell, that actor?
I think so, yeah.
Just that scene where it's like, look at my quant, and it's like, it's so over. It's so over.
Mm-hmm. The signs are there.
Yeah,
It's the start of it. And to be fair, this might be a
everyone's
result.
high on the Kool-Aid.
Yeah, everyone's high on the Kool-Aid. And the thing is, it's the only thing to drink. We just stated in the
We're
last.
all big sipping together.
Yeah, man. Like we stated in the last article, people have less than $500 in savings. And only that with how inflation's going up, it's better to own assets than. Now, I'm not saying this. This is not financial advice. If you only have $500, don't put it in stock. You might need it. This is not financial advice. Don't you listen to him. Don't you listen to him. This is not financial advice. But if people have that mindset of I can get rich quick, here's a company that literally went from $2.50 to $17. All you had to do was buy like, what was it, like take your $500, buy what was it, so I was saying
You take like 50 grand, you dump it into buying
yeah, you
like
buy
six
you
GPUs.
buy you buy 40 of the all bird stock, and then you buy 40, you come out with a profit, you come out with like $6,000.
Yep.
That's easy money. In an economy where
Money.
keeping money in the bank is not bueno, don't put the money, if you're not okay with losing it, don't put it anywhere besides your wallet.
Which is why they're dropping the barriers to entry. They want you jumping at this stuff. They want you to make that decision to go, well, I mean, if I don't have to put in that much money,
Yeah, if I can just
like,
put in
sure,
like
you're right. There might be a tiny, tiny, tiny percentage of the population that could responsibly do this at less than $25,000. It is it, if you are not already like someone who is, but I'll say this much: if you are the type of person who could do that, you probably also are savvy enough to get together the money, to do it legitimately.
yeah.
It's kind of like if you're not already in the club, there's a reason for it.
There's a reason for it for sure. I'm not trying to be mean. I'm not saying don't chase your dream. We're not saying don't chase your dreams, but
Exactly.
maybe earn the money
there's a knowledge
first.
base there's a knowledge base that has to exist first.
Yeah.
There's a reason that there's friction between
And,
you and what you want.
and that's why
It's
you're
to see if
listening
you're
to us.
worthy.
That's why you're listening to this channel. You want to get
Exactly.
in on the knowledge.
The
The Giffen, economic news, research, and commentary. This is not financial
Put on a
advice.
t-shirt. This
Put
is
on a
not financial
t-shirt.
advice.
This is not financial advice.
This is commentary.
This is
and
pure
entertainment.
commentary. But well, for our last part, we've got